Markets react to the escalating tariff wars as Donald Trump says his administration will introduce more levies in April. We will be looking at the EU's defence plan as Trump suggests that both Moscow and Kiev are ready to end the war in Ukraine. And Arab leaders unanimously approve a reconstruction plan for Gaza. That's at an emergency summit that has taken place in Cairo. Hello there, I'm Neil Harvey here with the latest business and finance news for you on TRT World. In his address to the US Congress, President Trump has announced further reciprocal tariffs will be introduced come April. The speech came on the same day as the US moved closer to a standoff with some of its largest trading partners. In response to US levies, both China and Canada retaliated with duties on American goods. Mexico says it will hit back at American tariffs shortly, in a sign the trade war might be just beginning. TRT World's Victoria Innes has details.
Create hundreds of billions of dollars in economic...
They are the US's largest trading partners. But that hasn't stopped Donald Trump from slapping the steepest tariffs in decades on all of them.
25% on Canada and 25% on Mexico.
How high are you willing to go against China?
Well, I can't say. It depends on what they do with their currency.
For the moment, at least, an increase from 10 to 20% on China. No sooner had the trade war long promised by Donald Trump kicked up a gear and the backlash from those in the firing line began to pour in.
There is no motive, reason or justification to support this decision that will affect our peoples and nations. We have said it in different ways. Cooperation and coordination, yes. Subordination and interventionism, no. Mexico must be respected. We are equal nations.
Mexico responded with 25% tariffs of its own as its truck drivers were left waiting to cross into the US on Tuesday morning. The same from Canada, which didn't hold back.
Now, it's not in my habit to agree with the Wall Street Journal, but Donald, they point out that even though you're a very smart guy, this is a very dumb thing to do. We two friends fighting is exactly what our opponents around the world want to see.
Meanwhile, China said it would impose 10 and 15% tariffs on a range of American agricultural products.
I would like to repeat that the Chinese people will not be intimidated. We never allow ourselves to be dominated or bullied. Pressure, coercion, and threats are not the right way to deal with China.
The US president has been threatening tariffs for more than a month. And despite previously delaying them for his two closest neighbours at least, he now says there is no room left. According to him, a failure to stop illegal immigration, drug trafficking and unfair trade deficits are all to blame. But those targeted accuse the US of constantly moving the goalposts, no matter what concessions they make. And all agree that it is the consumers and businesses on all sides who will be hit the hardest. Victoria Innes, TRT World.
So what effect does that have on the markets? Well, they're shifting as always. Investors digest China's new economic targets as well and the latest trade developments. Some regions show signs of resilience, others are under pressure from tariffs and inflation concerns. Now, investors are examining predominantly China's 5% GDP growth target, 2% inflation expectations set during the two sessions meeting. Mainland China's CSI 300 index inched its way up 0.13%. Hong Kong's Hang Seng gained 0.35%. Japan's Nikkei 225 slipped 0.16%. Topix down 0.15%. Investors assessing the impact of those US tariffs. Meanwhile, South Korea's Kospi jumped 1.09%. The Kosdaq climbed 1.26%, showing resilience. The uncertainty, though, around the tariffs on China, Mexico, Canada are continuing to influence the global markets. Australia's economy, that expanded 1.3% year on year in the fourth quarter, edging past expectations of 1.2%. But the Australian stock market, go figure, fell. S&P ASX 200 losing 0.92%. Economic growth remains steady. Concerns over global trade tensions and inflation keeping investors, it seems, cautious. What does all that mean? Let's bring in Josh Mahoney, who's the Scope Markets Chief Market Analyst. Welcome to you, Josh. So I have to start with the trade tariffs from President Trump. When he first imposed them, and we hear there would be reciprocal measures coming, my first thought was, well, it's in his nature to not allow people to kind of bully him back. He will probably maybe react with even more tariffs, and that is exactly what he's saying he plans to do. Where does this end?
Yeah, quite frankly, the idea that he's going to be able to just enact one tariff and he won't get anything in return seems foolhardy at first glance, but ultimately, if you do have this tit-for-tat war, then they will be in a position where one of the countries will have to come to the table. Ultimately, it stands to reason that if one country has huge barriers to entry for businesses from the US, then they're going to have to retaliate. Certainly at the moment, markets really reeling from measures that aren't the reciprocal tariffs. I think people who looked at the measures against the likes of Canada and Mexico and China and thought this is the worst that it's going to get. Then you hear from Donald Trump and he says April the 2nd, that's when we see the real tariffs kicking in. And those initial measures are just to do with fentanyl. So we could be in for a rocky road ahead. But this is the inception period. And so the initial volatility, hopefully, will ultimately give way to negotiations and discussions which lead to freer trade rather than tighter trade.
When every day we're talking about the markets react, I just want to clarify for everybody watching, perhaps if they don't know. When we say markets react, are we talking about human operators with an emotional response to, for example, the information about the trade tariffs or words that perhaps the US president has said in his speech to Congress? Or are we talking about algorithms and AI, which is processing things very hard fact analytically?
Well, look, I mean, there's a lot that goes into a market, quite frankly. It's going to be a little bit of all of the above. Certainly, if you're just going to take specific words and trade around that, which has historically been done, it's going to be quite difficult with Donald Trump because he says lots of different things over time. There's going to be a lot of flip-flapping when it comes to exactly what Donald Trump says. But ultimately, whether it's the algorithms and the robots or whether it's human beings, they are in for the time being, at least, a highly volatile period. And that's something that traders and investors are going to have to address and deal with. And then down the line, I think we will see things settle down. But certainly right now, it feels like we're at the beginning of this stagflation crisis in the US. Question marks about growth, question marks about inflation, and a breakdown in global trade. And that's why we're seeing weakness, irrespective of who's doing the selling.
And the reason I ask about the technology side of things, when someone like Donald Trump says, like he has just said, we're going to get Greenland one way or another, a human would probably be confused by that. If a computer program took him literally, it might think that there was a world war coming. The impacts of his words can be potentially massive. And I would argue that even humans don't necessarily understand what his true intentions are with Greenland. In this time of massive uncertainty, is this an opportunity in the financial markets, or is it just a time to wind your neck in and look for a safe haven?
I think there's always opportunities, quite frankly. I mean, if you see a market falling, say, 10%, 5%, and it's at a period where there could be a huge economic crisis, then that's certainly the time to sort of hunker down and just try and wait it out, the likes of 2007, 2008 or the pandemic. I don't necessarily think we're in that position, even if we see some near-term jitters that are coming through in the economic data points. The longer-term narrative, I think, still remains strong. And one thing that we've seen with Donald Trump is he can say something one week and a week later there's an agreement. So I think people should be quite aware of the fact that things will be fluid, but I don't think Donald Trump wants to crash his economy, and that means that things should ultimately resolve in a positive manner. 1
minute we're talking about one of China's biggest construction companies in danger of going bankrupt, it seemed, and the next minute we're saying that China's economy's grown 5%. How do you assess the impact that's going to have on financial markets?
Well, look, 5% remains the target, and I don't think they're necessarily in a position where they want to suddenly start lowering that target. That really does allude to the idea that they think that they can get past some of the tariffs with the US, and also the fact that they have, to a large extent, sort of recalibrated their economy away from being as reliant on the US as they were under Trump in the first place. Of course, we've got the whole AI boom yet to come in the US, and there is a feeling that things are starting to turn. We've just seen the latest Caixin data, manufacturing data this morning, which came up better than expected. So things are starting to look a bit more optimistic. But as you've said, the real estate sector is really the ongoing concern, which still remains on a relatively unstable footing.
Josh, pleasure. Great to speak to you. Thanks so much for coming on. Josh Mahoney, Scope Markets Chief Market Analyst. Okay, Ukraine's special advisor to President Zelensky has told TRT World that there is a what he called window of opportunity in negotiations over a possible peace deal in the country's war with Russia. Speaking in an interview with our correspondent Joel Flynn, Mikhailo Podolyak said that both sides now had clarity and understanding of one another's positions, but he also warned Russia was everybody's opponent and poses a risk to the entire world.
Clearly, this will have some negative effects, because key tools like anti-missile systems are included, which offer wide-ranging protection for Ukrainian civilians and infrastructure. But let's see first what exactly will stop, and then let's work with our European partners to find replacement programs.
This still looks like it feeds into this interpretation of events of Ukraine and the United States having very strained relations at the moment, especially after Friday. What do your government believe it will take to repair that relationship?
In my opinion, this is actually a window of opportunity for bilateral relations between the United States and Ukraine. It's also a window of opportunity for Europe to be more substantive in their plans, and a window of opportunity for other countries.
Some in America, particularly loyalists to Donald Trump, have been very critical of how your president behaved and conducted himself in the Oval Office on Friday. What is your response to that criticism, and will President Zelensky apologize to Donald Trump?
We're all under emotional pressure, the US, Ukraine and Europe. War has created problems for all of us. It's clear we can only talk about our own presidents. We're loyal to them, of course. Trump has loyalty, understandably and rightly, just as we are loyal to what President Zelensky is doing. It's important to be heard, for Ukraine to be heard, and Zelensky does that well. At the same time, we have to understand that Russia is everyone's opponent, not just Ukraine's. This is why discussions between presidents, even emotional ones, are normal. The most important thing is that we arrive at the right conclusion, which will help all of us. What's the conclusion? That aggression cannot go unpunished.
The Europeans, the British and the French, have said that they are discussing how to bring about terms of some sort of truce or ceasefire. We know that the Americans are pushing for a peace deal as well. The Russians have said that they are open to it on their publicly stated preconditions. Will Ukraine sit down for any sort of peace talks in this context?
Even showing up to negotiations with Russia means you no longer want a real negotiation process. Only by forcing their hand can you do that. You need to demonstrate strength to Russia, not just saying that they're ready to negotiate. They need to understand things will get worse for them. We also need support. Europe has begun to do that today. And Russia should understand that Europe is wealthier than it realizes. Europe is transforming its security and defense, investing more in military production, and clearly understands the risk posed by Russia.
Next, with global security concerns rising, Europe is stepping up its spending on defence. A new multi-billion-dollar fund could redefine the continent's military. But what does that mean for the economy, for the stock markets and for global alliances? As the US adjusts its role, the EU is making some bold moves. So what comes next? The European Union's unveiled a $158 billion defence fund to strengthen its military capabilities. Now, the proposal follows America pausing military aid to Ukraine, which raised concerns about European security. EU leaders are going to have to discuss this plan, but it could see defence budgets going up by 1.5% GDP and unlock around $650 billion of funding over 4 years. EU member states collectively spent $325 billion on defence last year. Markets responded cautiously, investors weighing the impact of increased military spending. Defence-related stocks saw mixed movements, surprisingly. Uncertainty over NATO and US policy continues. European markets closed 1.1% higher, driven by an 8% jump in the Stocks Europe Aerospace and Defence Index, the best session they've had in 5 years. Germany's Hensoldt gained 22.3%. Italy's Leonardo gained just over 16%, and France's Dassault Aviation made 15% gains. Saab, Thales and BAE Systems also rising. Rolls-Royce added 4.4% to extend its rally after last week's all-time high. Now, the EU plans to relax budget rules, freeing up $840 billion for those defence investments. And if approved, the shift could reshape Europe's economy, influencing debt levels and government spending. Experts are warning increased military expenditure could divert funds, though, from other economic priorities, which could affect long-term growth. OK, let's analyse this now with Mikael Valtersson, who is a military analyst and a former officer with the Swedish Army, who joins me live from Stockholm. Appreciate you coming on, Mikael. So I want to talk about the approach of Donald Trump to negotiating peace, which is what he tells us he is doing. So President Trump has said that he offers the opportunity to allow America to come in and take Ukrainian minerals. What does Ukraine get from this deal?
Well, the problem with this deal is that the U.S. wants to get the money back from what they already had given. And from the American side, they don't want to give comprehensive security guarantees. And this is not just an U.S. idea. Zelensky has been talking about his peace plan, and a part of that was a mineral deal. But that mineral deal included real security guarantees for Ukraine. So that's the main problem to work out. There might be some.
Do you see the point, though, Mikael? Because, you know, if you're President Zelensky, you've got some salesman turn up at your door and who says, I'm going to come in, I'm going to take some of your valuables, I'm not going to provide you with any kind of security guarantee, so I'm not offering you anything. Surely he's thinking, well, what do I get out of this? Why would I even entertain this idea?
Yes, of course. It's very hard to sell in Ukraine. They have been given money from the US earlier. And if the only thing that's happened is that you give back those money now or in the future and don't get anything, it's impossible to sell in Ukraine.
That is exactly what Donald Trump's trying to do. He's trying to sell this as an opportunity. It seems, though, every time he speaks about global conflicts, he inevitably is talking about money. And often he exaggerates the figures. He says that the US has put in more than $300 billion into Ukraine. I've not yet seen one expert who can justify those numbers. Does he do this deliberately, do you think? Purposefully exaggerates the influence that America has had in order to make him seem more significant?
Yes, I think it's several aspects. One is that he has seen a figure from someone and he uses it, and he always uses the highest numbers. And at the same time, he also sees himself as a very good businessman who can make deals. And you are hard from the beginning. And then when the compromise is achieved, he hopes that it will be still in U.S. favor.
Mikael, thanks so much for your time. Military analyst Mikael Valtersson, my guest.
Welcome.
The Palestinian group Hamas says that it won't stand in the way of Gaza being politically governed without them, as long as that is achieved through national consensus that initiates reconstruction in Gaza. Now, this comes as the Egyptian plan was unanimously agreed upon by Arab leaders at the emergency summit on Tuesday in Cairo. Egypt's President Abdel Fattah al-Sisi proposed a Palestinian committee to temporarily govern post-war Gaza. Let's look at the final statement of the agreement. Now, that agreement rejects the forced displacement of Palestinians from Gaza. Egypt has drawn up a plan for the reconstruction of the Strip. It comes in phases, 200,000 houses expected to be built across 7 locations over the period of 2 years. The cost, $20 billion in that first phase. Now, the cost of the entire reconstruction project is estimated higher, $53 billion. That whole process will take 5 years. The agreement also urges Israel and Hamas to implement the second and third phases of the ceasefire agreement. No sign of that happening just yet. Calls for deployment of international peacekeeping forces in Gaza and the occupied West Bank, obviously, to maintain the peace.
The Egyptian plan has early urgent recovery programs that will be implemented between 6 months to 1 year. Temporary housing units will be transported into Gaza to house the homeless Palestinians. The debris will be lifted and removed. Remnants of bombs and missiles will be processed. The reconstruction phase will last 2 years. Starvation cannot be used as a tool of collective punishment in this holy month of Ramadan. The Palestinian Authority needs to be empowered to take its responsibility in Gaza. This empowerment will be through a committee of non-factions and technocrats. We will also train thousands of police forces in Gaza.
Okay, let's take a quick look now at other business stories making headlines around the world. Cybersecurity firm CrowdStrike's shares fell nearly 9% after the company issued a lower than expected earnings forecast. Despite the drop, revenue actually grew 25% to above $1 billion last quarter. That beat expectations. Annual recurring revenue also rose 23%, $4.24 billion. Why is it happening, you ask? Well, the weak outlook probably because of months ago that major IT outage that was linked to the company. Iron ore prices fell as the US and China imposed tariffs on each other. The US doubled duties on Chinese goods up to 20%. That prompted China to increase import taxes on more than $20 billion worth of US products. Despite the drop, though, analysts expect strong Chinese steel demand to support prices. BlackRock and its partners will buy a major stake in Panama Sports for $19 billion. The deal expands BlackRock's role in infrastructure and supports Trump's push to reduce China's influence. The agreement also includes 90% of Panama Ports, company, which runs key canal entry points. Ghana's new president's leading an inclusive economic forum hoping to fix the country's financial crisis. Still struggling with an IMF program that's designed to pull it out of debt, the president is hoping for a flood of homegrown solutions to solve the problem, and so are its citizens. Isaac Kaledzi in Accra has more for us.
Ishmael Mensah loves his job in this popular street in Ghana's capital, Accra. It pays his staff, bills, and his school fees at a tertiary level. But the past 3 years have been difficult.
My main challenges for the business, first of all, is the oil, so expensive. And then plantain, when it's out of season, very, very challenging. And gas, very, very challenging.
In 2022, Ghana's inflation hit a record 54.1%, with food prices hitting close to 60% the same year. For many ordinary citizens, the cost of living remains high, while income levels fall. Some have lost their jobs and investments. Ghana's 2024 general election was largely decided as a result of the country's economic turmoil and how the previous government handled it. The IMF is currently bailing out the country, and the new president, John Mahama, who has promised to fix the crisis, says he wants a lasting solution, and Ghanaians need to be on board to help. And that's why hundreds of stakeholders from various backgrounds attended the two-day National Economic Dialogue to discuss local solutions to the country's recurring economic woes.
This dialogue here today must serve as that turning point. A forum where we move beyond diagnosing the problems and instead implement concrete pragmatic solutions to reposition Ghana on a path of sustainable growth.
Participants want the Mahama administration to focus on cutting down government spending, engage the private sector to create jobs, restore good governance, and fight corruption. But growing trade protectionism could lead to higher food and energy prices, and citizens are hoping for economic relief sooner than later.
We pray so. I expect John Mahama to do better. I expect him to do better. So we just support him with our prayers so he can help us.
But how soon Ghana can reset its economy may depend on whether the government can translate talk into action. Isaac Kaleji, Accra.
Okay, let's bring in Theo Achiampong, who's an economist and a political risk analyst, and he joins us from Accra. Theo, how does the President's National Economic Dialogue aim to solve the problems?
It does in multiple fronts. So this is the second time since 2014 that they've brought a collective array of stakeholders from the private sector, from government, from the development community, try and find solutions to the issues of the high cost of living, the inflation problems, the exchange rate, but also really drive home the point about raising more revenue and then dealing with a lot of the losses that the state-owned enterprises have been incurring, for which have also had an impact on the debt situation of the country. And I think going forward, a number of key proposals have been made on the table. So, for example, there is the potential privatization of the national utilities on the table. In addition, there are some expenditure cuts that have been proposed, and we're likely to see some further, taxes also being scrapped to ameliorate the cost of living for ordinary Ghanaians.
I'll tell you what this sounds like to me. It sounds like a think tank. It sounds like the leader of a country says, our economy is a mess, I don't know how to fix it. Come in and tell me, how do I fix it?
Yeah, I think to an extent you're right. And they're saying how to fix it, also bringing together the collective voices of other different stakeholder groups. So traditionally, whereas you've had the World Bank or the IMF come in to try and fix the mess or the issues, they're trying to bring other people around the table just to have, complementary voices around how you chart a path out of the crisis. The good thing, in my view, and having actually participated in the dialogue myself, is seeing the complementarity in terms of what needs to be done and what the existing IMF program actually is pushing the government to do, for example, on the issue of revenue.
Theo, that's all we've got time for, but thank you so much. Pleasure to speak to you. Theo Achiampong, economist and political risk analyst, on the line from Accra.
Pleasure.
And that was your business news. Theo just mentioning there, alternative voices. Why not? Let's have some of your views. Do email me, neil.harvey@trtworld.com. Tell us what you think about the business news and what you would like to see. That's all for today. See you soon.